One event set the entire tape on Monday. The U.S.-Iran ceasefire expired, and the president threatened military action against Oman.
It priced through oil, through gold, through the VIX, and through the long end of the Treasury curve.
The 30-year closed at 5.31%, a 19-year high, the highest since June 2007.
And the S&P fell 0.5%. That is all it did.
The index barely moved. Underneath it, the dispersion was enormous. And when we measured the volume, only one thing on the board was actually bought.
Quick note, this is education and entertainment, not investment advice. Companies are examples. Never buy or sell calls. Do your own research. S&P 500, 7,745.06, down 52 hundredths.
Dow 53,459, down 51 hundredths. Nasdaq 26,644, down 32 hundredths. Russell 2000, 3,057, down 35 hundredths.
VIX 1519, up 6.60%. That is the biggest move on the screen.
Crude up 2.69% to 84.62. Gold up 2.14% to 4,474.20, a new high for the move.
Dollar index 99.59, down 5 hundredths. Flat.
Energy up, gold up, volatility up, dollar unchanged. That combination has one specific cause.
The ceasefire between the United States and Iran expired on Monday with no extension.
The president said Iran must surrender and threatened to bomb Oman if it gets in the way. Oman is a neutral state and the region's usual mediator.
Oman and Iran had just announced progress on a joint shipping route through the Strait of Hormuz, which has been largely blocked since the conflict began.
About 20% of the world's oil trade moves through that strait.
So, crude up 2.7, gold to a new high. The VIX up 6.6. Energy the second best sector on the board.
Energy and gold rising together with a firm long end and a flat dollar. That is an inflation and geopolitics tape. It is not a growth scare. The 30-year Treasury closed at 5.31%.
Highest since June 2007. 19 years.
And it did not come from nowhere. The 30-year auction on August 13th cleared at 5.216%, the highest yield at a 30-year auction since 2001. Bid to cover 2.39.
So the auction said 4 sessions ago what Monday confirmed.
The 10-year is 4.72. The move is concentrated at the long end.
And this is the part that changes what it means.
The 30-year TIPS real yield is about 3.03%.
5.31 nominal, 3.03 real. The difference is inflation compensation, and it is about 2.3%.
Which is close to target. The market is not pricing an inflation problem 30 years out.
So the move is in the real rate and the term premium. Investors are asking more to hold duration, not asking for protection against prices.
That distinction carries the whole segment. A 5.31% long bond driven by inflation expectations and one driven by term premium call for opposite responses. And there is a bidder for long-duration capital that did not exist 3 years ago.
AI capital spending is now about 32% debt funded. In 2024, it was about 9%.
The hyperscalers are running at roughly 15% of all U.S. investment-grade corporate issuance.
Alphabet posted its first negative quarterly free cash flow, minus $5.9 billion. Capital spending of $44.9 billion against $39.1 billion of operating cash flow.
Oracle's fiscal 2026 free cash flow was minus $23.7 billion. S&P cut it to BBB- in July.
And the Bank for International Settlements, in its March review, called the off-balance sheet structures shadow borrowing. Obligations economically akin to debt, sitting outside the balance sheet.
Alphabet is now preparing its first Australian dollar bond sale.
I read. The build-out has become a large new bidder for exactly the long-duration capital that prices the 30-year. Part of that term premium is being produced by the build-out itself.
Now the equity tape, because a 0.5% decline hides what happened underneath it.
Semiconductors up 1.58%. Software down 2.01.
A 3.6-point spread in a single session.
Energy up 1.08. Tech up 16 hundredths. Utilities down 29 hundredths. Financials down a full percent.
Microsoft fell 3.04% to 480.35 and was a large part of the software decline.
This is the third distinct semis over software episode since late July.
The third instance of anything deserves a test. Every number here is against that name's own 30-session median volume.
Start with the market. The S&P traded 69% of its median. A quiet Monday.
Against that, software. The software ETF traded 109% of its median. Microsoft 96.
Both above the market on a day. The market was quiet. That selling was real.
Now the other leg. The semiconductor ETF traded 60% of its median.
60. That is the thinnest thing on the board, below even the quiet market.
And Nvidia, 66%.
A rotation needs two legs. Money leaves one place and arrives in another, and it shows up in both. Monday only had one.
When we opened the semis up, the label was wrong.
Nvidia, down 0.07%. Broadcom, down 0.14. AMD, down 1.63. Qualcomm, down 2.18.
The four biggest names in the complex were flat or lower.
So what carried a 1.58% gain? SanDisk up 8.88%. Applied Materials up 5.55. Western Digital up 5.35. Micron up 4.13. Lam Research up 3.45.
Memory. And the equipment that makes memory.
It was not semis over software. It was memory over software.
And SanDisk traded 121% of its median, the only above normal buying anywhere on the board.
The Commerce Secretary said publicly that the administration does not want Apple buying Chinese memory, naming Changshin and Yangtze Memory.
Both are designated Chinese military companies by the Defense Department. Yangtze is on the Commerce Entity List.
And this is landing during a global memory shortage, which is why Apple was looking at them at all.
Take the largest buyer of memory in consumer electronics and remove two suppliers from its list in a shortage.
The demand does not disappear. It goes to Micron, to SanDisk, and to the Koreans.
One follow-up. Applied Materials rose 5.5% on Monday.
On Friday, it fell 5.12 on a beat and a raise. It opened at 498, ran to 523, and gave every point back.
Monday, it took the whole thing back again.
Same company, same results, opposite direction, 3 days apart.
The largest single AI infrastructure commitment on record was announced on Monday.
NVIDIA is backing up to $105 billion of financing for an open AI data center campus in Ohio.
4.25 gigawatts initially, expandable to 8 gigawatts by 2032. The first 800 megawatts come online in 2028.
Built and operated by SB Energy, a SoftBank subsidiary. NVIDIA is separately investing $1.5 billion into SB Energy. OpenAI leases the site for 20 years, and NVIDIA is the exclusive chip supplier.
As reported, and this is same-day press, not a filing, the $105 billion is a cap on credit support, not cash going out the door. It covers lease and power obligations, and NVIDIA pays only if OpenAI defaults and the owner cannot recover enough by releasing or selling the assets.
It was also cut down from a $250 billion draft.
For comparison, Broadcom's platform in June was $35 billion, through an Apollo vehicle that buys chips and leases them to Anthropic, with Broadcom guaranteeing the senior note holders. AMD went a third way, a warrant for up to 160 million shares at a penny, and no guarantee at all.
3 companies. 3 completely different levels of risk for the same problem.
And the tape's verdict on the biggest of them? NVIDIA closed down 0.07% on 66% of its normal volume.
The largest AI financing commitment ever announced, and the stock did not move on a below-average day.
Gold closed at $4,474.20, a new high for the move, above both the prior best close and Friday's intraday high.
And the miners led. The miners ETF up 2.09% against the metal up 1.00. 2.1 times.
EM Gold up 4.09. Kinross up 1.50.
Our read. On a day, a ceasefire expired and a strike was threatened. That is event premium.
One session does not settle whether the miners have resumed leadership. That is evidence, not a conclusion.
Home Depot reports Tuesday before the open. Intuit the 25th.
NVIDIA, Salesforce, and the July PCE inflation report all land Wednesday the 26th, Workday the 27th.
Jackson Hole runs the 27th to the 29th, with the keynote Friday the 28th. Warsh is first as chair on financial innovation and payments.
And the Bank of Japan decides September 17th and 18th. That's a wrap. If this was useful, follow or subscribe for the next one, and tell us where we're wrong. Thanks for listening.